Good morning, everyone. It's Shauna, the tax goddess. I talk a lot about taxes. Tax goddess, I wonder why. Today we are going to be talking about the Biden proposed changes. Now, today is a very exciting day in the US. Today is November 3rd. It is election day. Between today, tomorrow, the next few days, potentially the next few weeks, we are going to be watching and listening and waiting with bated breath to find out who our president is, whether we are going to continue with President Trump or whether we will have President Biden. So at this point, everything that I'm talking about here are proposed changes. So none of this has come into place. Now, one of the things that I do want to point out here, guys, is that if Biden gets in, they are expected, his cabinet and him as a president are expected to make these changes very quickly. With the COVID-19 issue that has come up, obviously the U.S. government has spent a ton of money, literal tons of money, trying to keep the American public fed, in jobs, everything working and rolling and continuing as smoothly as possible in the American economy. So, if you guys don't know about Tax Goddess, brief little point here. We help 6, 7, and 8-figure entrepreneurs reduce their taxes, build massive wealth accounts, save for retirement, and of course, reach their goals, whatever those goals are. So if you have questions, of course, head over to taxgoddess.com. Now, on to the proposed changes. All right, so some of these are doozies, absolute doozies here. One of the very first ones, and let me preface this, I'm sorry, guys. A lot of these have to do with income levels of 400,000 or over, but some of them matter whether you're making a single dollar of income or not. So some of these, I'll say whether it applies to 400,000 and over in gross income, or whether it applies to everyone across the board. So the very first one, $400,000 and up, okay? Your ordinary tax bracket, at the moment, the current highest tax bracket is 37%. We are expecting 39.6. So basically going back to the pre-2018 tax law changes, the TCJA changes, from going to a max rate of 37% now to a max rate of 39.6. Now, the second one is also going to apply to $400,000 over income earners. That is the removal of QBI. Now, if you don't remember or don't know what QBI is, QBI stands for Qualified Business Income. One of the things that was put into TCJA was this free 20% tax deduction for business owners, right? For anyone that owned some sort of flow-through income. So that would be partnerships, just corporations, Schedule C, small businesses. They were all getting a free 20%. This change under Biden's proposed change would remove the free 20%. So effectively taking money out of the hands of the business owners and unfortunately probably leading to fewer jobs. But that's an argument for another day. Now, the next one, capital gains rates and qualified dividend rates. These will be increased, okay? Now, this is for people with $1 million in income and higher. So certainly not going to impact everyone. But the major piece here is that right now, long-term capital gains rates have a maximum of 20%. So someone would get a long-term capital gain rate when they sell something that was an investment that they've held on to for longer than 1 year. So for example, if you had a rental property and you sold it and you've held it for longer than 1 year, if you've owned stock for longer than 1 year, if you've had your business and you sell your business and you've sold it for longer than 1 year. Now, really what you're hearing here, guys, okay, is that in all of those cases, your income, if you've sold a business, the sale of your business could put you over that $1 million cap. Now, the major issue here is that instead of that nice 20% capital gains rate that we currently enjoy, the max cap rate on capital gains, you could be paying 39.6% on capital gains. This is going to have a serious impact, again, on people whose ordinary income tax rates, your income is over 1 million in the proposed, again, this is the proposal by Biden. Now, let's stick on the real estate topic because about 40% of Tax Goddess's practice is real estate investors, fix and flippers, whatever it is. Right now in the law, there is something called a 1031 exchange, which basically says that if I have a piece of real estate, I don't want that particular piece of real estate anymore, and I want to change to a different piece of real estate. So, for example, a rental apartment complex to 3 single family homes, okay? I can use a special code section called 1031, the 1031 code section, to exchange my apartment complex for the 3 single family rentals, and I will not have to pay any tax because I had rental property and now I have rental property, and so there should be no tax. The 1031 section exchange has been for a really, really long time. And under Biden's proposal, he again will be removing the capability of the 1031 exchange for anyone whose income is over 400,000. Okay. Now, guys, up until now, we've been talking about everything for people 400,000 or a million and higher. Okay. I know that does not apply to everyone. Let's talk about two things really, that will impact people whose income is below the $400,000 limit. The first one is the removal of something called the step-up in basis rules on death. Now, really what this was originally put into was you've got an elderly parent, they've got assets, okay? They have their house, maybe they have some stocks that they bought forever ago. And so their basis, their purchase price in that is really low, right? Because they bought it forever ago, okay? They've been living in their house for 40 years, right? We see this a lot actually in California, where the parents bought the house at $50,000 in the center of San Francisco, and now it's worth 7 million, right? It's worth a significant amounts of money. What was happening with the step up in basis is that when the parents passed away and they passed on this asset to their heirs, the heirs actually received the asset at whatever fair market value, FMV, is currently, okay? So let's take that apartment in San Francisco. They bought it for 50,000, it's now worth 7 million. The heirs under today's rules would get that asset with a basis of 7 million. So if the heirs were then to turn around and sell the apartment, they got it at basis of 7 million. They're selling it at 7 million, the fair market value of today. They would pay zero tax on that pass down of the assets to those individuals. Biden's proposal is to remove the step up in basis completely for every income level all the way across the board. Okay, so let's take a more common example. Parents bought a house, $70,000. They've lived in it for 40 years. It's now worth $500,000. Okay, if you get that house, your basis in that house is also $70,000, what they paid for it. Okay, so if you don't need that house, you turn around and sell it, you're now going to have to pay tax. And remember, those capital gains rates could go through the roof, right, to 39.6. You could pay as much as 39.6% tax on the sale of your parents' house. So this particular proposal reaches into every level of income. If you receive any assets whatsoever on death, an inheritance, you will now pay tax on those assets if this proposal goes through. So it's a significant increase in tax across the board. Now, the next one that applies to almost any business owner is the change if you're a C corporation. Let me back up. If you're a C corporation, right now, one of the major changes in the TCJA change of 2018 was that C corporations enjoyed a 21% tax, which made it much more fair because, of course, as we spoke earlier, the S corporations and the partnerships were receiving this 20% free deduction, right? So all the tax rates were coming down. So if you were a partnership or an S corp, it came down. If you're a C corp, it also came down. It was at 35, it went down to 21. Now, if you are a C corporation, if Biden's proposals go through, your rates will go back up to 21%. So we have some significant planning that you want to be looking at here right at the end of 2020, to make sure that you're only paying 21% and not 35% if, of course, Biden gets in. So a lot of this is going to depend on who becomes our new president, all right? So, of course, Tax Goddess will be watching with bated breath what is going on with the presidential elections. And, of course, if you are planning ahead of time, right, we really have a second sub-level here. Even if Trump stays in as president, the likelihood that some of our tax laws are going to change to increase the tax rate is pretty high. Okay, we as a country have spent a lot of money, as I said at the beginning of this, tons, literal tons of money, trying to keep our economy afloat, trying to keep our businesses afloat. So it has been, money going out the door, right? Money being spent like water. And while it's good and it's helping our businesses and helping people keep employed, helping people keep their homes, not live on the streets, money costs money, right? This is something that the American public will at some point have to repay. So the thought is, and of course we're not sure, this is all rumors, right? This is all rumors, okay? At some point there may be tax increases. Now, of course, there's always going to be tax increases. There's always going to be changes. But the question is, 2020 as a whole has some absolutely amazing tax laws, tax deductions, things that you can take advantage of that if you decide not to take advantage of before we either get a new president or move into 2021, you may lose for who knows how long. It might be forever. It might only be never. Who knows? So the point of what I'm saying is plan early, plan in advance. Make sure that you are talking to your professional team because without them, you might get stuck in a place that you really don't want to be. All right. So thanks so much for joining us here. I love having you guys here as a part of the Tax Goddess family. Number one, if you're watching us on YouTube, or even if you're not, please subscribe to us on YouTube. It's youtube.com/taxgoddess. Number two, if you're not sure where to start, if you have some of these tax issues, if your income is over $400,000 and you're in a little bit of panic and you're not sure what's happening, reach out to us on taxgoddess.com. My team and I would love to work with you. This is our passion. We absolutely love helping people with tax strategy. Number three, if you've got a burning issue, you have sold a building, you have sold your business, you're about to close in 2 weeks. Even worse, your close date is January 3rd of 2021, and you've got some serious misgivings about what's about to happen over the next couple of months here with the presidency. Reach out to us on taxgoddess.com. We are still taking clients for strategic tax coach planning, which is how Tax Goddess has this year and counting reduced our clients' tax bills by over $312 million, all using legal and above board tax strategies with T's crossed and I's dotted. So definitely reach out to us if you have any questions, need any help whatsoever. Can't wait to speak with you guys and talk to you. And of course, if you have any questions, feel free also to put them down below. My team and I will try to answer them for you as quickly as possible. So definitely reach out to us and let us know how we can help. Thanks so much, guys. Have a great day. I'll talk to you later. Bye.